We have to love ourselves a little bit more, and that's by respecting and paying ourselves.
If you want to put priority on you and your family and your system, this is probably going to be a good fit.
Yes. Welcome, everyone, to another episode of Wealthwise Banking. Jeremy and I have been talking. We thought we would just put this episode together because we're always talking about really building for the future, thinking long term, building an opportunity fund to make small money movements, to put our money to work. Because as our buddy Warren Buffett says, if you don't learn how to put your money to work while you sleep, you will work until the day you die. But here's the thing. Recessions happen, life happens, change happens, events happen. And Jeremy and I shared, thank goodness for that opportunity fund when those things happen. And we're going to share some real life examples with you today. So, Jeremy, how are you feeling today, brother?
Oh man, I've been exhausted with all of this. What's that inevitable that you always say? The one thing that's inevitable in life is change.
The one thing that's constant.
Okay, I look at it as inevitable. Change is
Yeah, that's like the shortest quote. It's like a dad joke. My memory's not very long, and I give you super simple stuff like my last name, right? So I say, Jeremy, one thing is guaranteed in life. What is it?
change.
Yes,
Got it. Nailed it.
that's
Added
it.
to the boards. All right. Yeah, man. So we're kind of like coming up on the summer months, and I just want to talk a little bit about thank goodness that I have a source of capital. Lately, like what has been hitting me? I had a $4,200 hit to my car, right? I had to go do a car, um, repair repair the AC and stuff in my car, and it was like 4,200 bucks. I had a
You
nine
just take
thousand.
your shirt off, man. You can just take your shirt off and drive around. That's what I used to have to do in South Florida. No AC, just take the shirt off, put it in the seat next to you. You don't want to do that?
No, I don't think my dog would like it very much. She is a little Frenchy. She gets a little hot, so we got to take care of her health too. So if it was just me, maybe, right? I got to consider other people's comfort.
Always considering everybody else. Lucky LB. That's sweet of you. But sorry, continue. You had some other things that are popping up unexpectedly.
With over 9 grand on replacing the air conditioner in one of my units, we had to rent a crane to put the AC unit on top of the apartment building. So that was a big hit. I've got a some tenants that are moving out after 2 years, completely wrecked the place. That's going to be about 8 grand or so. So you think about like all these little things just keep adding up. And keep in mind, Jeremy was already developing real estate, right? Like I have ground up development also in progress. What am I going to do? Stop the ground up development and halt the progress that we've made over the last year and a half? No.
Hmm.
Well, what I was able to do to access this emergency funds was go to my policies. And I was able to access liquidity, my rainy day fund. And I've explained to you guys before, one of the factors or one of the reasons I use my maintenance and capital expenditures for these very issues, right? Like life happens for my rental properties. I take tenant rents, I funnel a portion of them into my policy. That policy then grows for these rainy days, replacing the AC unit, tenant turnover. I'll tell you that if you want to get into real estate, you want to be a real estate investor because you think it's passive, it's not passive. Surprise. Nothing passive about owning properties and being a landlord. All right. But thank goodness I had the opportunity to go to my policies to have those repairs immediately available. And I'll be repaying those policy loans over the next year or two through tenant rents. But here's the cool thing about it, right? Like I have the opportunity, or I'm very fortunate to have the ability to tap into these policies for the emergency, but I also have the death benefit side of the house too. Because let's not forget the product in and of itself, my money has multiple jobs. It's got the first job of growing cash value inside the policy, the second job of being there when life happens or opportunity arises, and the third one of securing death benefit. And if I had only a checking account, Jason, my money would have only been working in one place. So I'm thankful that I was able to funnel a portion of it into a system and structured in a way that it's been put to work in three different places.
That is, well, I couldn't have said it better myself. I might have said it differently, but I couldn't have said it better with how you've built up an opportunity fund, how you built a system and a process by understanding like things are going to happen. Like you said, real estate, actually, anything's not really passive. Everything requires some kind of attention and a system and process to manage it. So when you're doing the real estate, the rentals, you have your tenants paying, the money's going into the system to build up. And then when change happens, because it's coming, folks, no matter what. And people like when change happens, Jeremy, we have so many conversations that they're surprised it happens. And then you hear things like, well, that was three. I hope it's over. Because bad things
Yeah.
happen right? Like how many things did you just name that happened? Your air condition, the tenants thing, the tenants, is that three or is there more?
No, that was three. That was three whammies all in the same month. It was
Yeah.
replacing the AC and a couple other things in the car. 4,200 bucks there, 9 grand on an AC unit, and probably another, a couple grand, close to 10 grand to replace a bunch of damage that was done in the unit, along with painting it and everything. So yeah, there was three pretty big hits that kind of, if you think like, what does the average person have? Does the average person have the ability to tap into 10, 15, 20 grand for an emergency, right? Fortunately, this is a system that I started small and I was able to scale it over time. And I think that's probably the bigger, more important lesson is start somewhere. You got to start
Yes.
somewhere, right? It's more important to start and scale than to never get started.
Yes. There was the biggest when they asked Nelson Nash, what is the biggest hold up or the biggest thing about this, he said, not getting started. Like the biggest drawback, right? Not getting started, not just starting, not taking action, just thinking about things are going to happen. Jeremy, like I don't think I was counting that was three, but I was like, wait, I hear that all the time. Things happen in three. So maybe we just cracked the code for everyone. Things are going to happen in three. It's not going to be one change, it's going to be multiple changes. And how are you prepared to handle it? Like, how are you going to handle it? What are you going to do? Are you going to go and take the 9 new pieces of mail offering you 0% credit cards and use one of those? And then now you think you're going to pay it off in time. And then change number two happens and you do it again. Change number three happens, you do it again. And all of a sudden, you are beholden to somebody else because you start paying interest. So not only are you using someone else's money and they're making money on you, but you're no longer in control of the situation. You no longer have the ability to change the schedule of your repayment if something else changes. Because we talk about it all the time, but my belief, Jeremy, and tell me if you still think this is true, but the wealthy have more choices. Is that fair?
I think it's 100% fair. The question is how they become wealthy. That's probably weird.
Ooh, what a segue. Oh my goodness. This is wow. The first two laws of wealth, right? And I have not created the laws of wealth. They are laws. And I heard Earl Nightingale, the man who did The Strangest Secret. So this is back from the 50s, talking about the first two laws of wealth. Law number one, Jeremy, law number one. What is it?
Change.
I love Jeremy. Jeremy, how about from the richest man in Babylon? What is the first thing that you're supposed to do?
Yourself first.
Pay yourself first. And what is the minimum that you're supposed to pay yourself?
I believe their guideline, their rule of thumb was 10%.
10%. Okay. So to make it easy for everybody, everyone is following along at the gym, in the car. If you make 50,000, you got to save 5 grand. Jeremy, you make 500,000. How much are you saving?
50 grand.
Look at that, Jeremy. I knew you got this. He's better at math than me, folks. You make $73,000. How much are you saving?
$7,300.
All right. So whatever, 7.3 million.
All right. We're just gonna I think we beat the
You
dead horse.
got the idea. You got the idea. So I was just having fun, but you pay yourself first and you set up the system and you automate it. And this is something I'm gonna share that Patty and I got off track. I recaptured all of the interest leaving our family over a 2.5 year period. Now we have passive income coming in. We have all these moving parts, and we stopped doing the basics. We stopped doing the footwork drills. We stopped shooting the foul shots. We stopped dribbling. We stopped paying ourselves first and automating it. And so on June 26th, in one of our money meetings, I realized this. The next day, got paid a couple $100. I took 10% off the top. And then the second piece is the piece I was building up to everyone. So drum roll. It was the second law of wealth, which is lifestyle creep, Parkinson's law. We
Mm.
have to spend much less than we make. But the thing that I had never heard or understood before is Parkinson's law actually requires a margin. It's an opportunity to create a margin. So if you're taking 10% off the top to put that money to work, everything Jeremy just said, you need a margin to protect the money that has to go to work for you. That is how the wealthy actually became wealthy because they had money they could put to work to go make them interest. And so now with that margin, that protects you from the three things that are going to happen: change, and you pay yourself another 10%. So I started taking 20% off the top every time I've gotten paid since that date. June 27th was the first day that got executed. And it's already feels so much different. We're ready for when we're going to need new tires in a couple months on 2 to 3 vehicles.
Yeah. And I know that we probably have listeners out there that are saying, hey, Jason, Jeremy, I'm paycheck to paycheck. I can't pay myself 10%. There's no way.
Ooh, I
How
like
bill
this.
won't get paid. A bill's not going to get paid if I pay myself 10%. Because if we look at the average savings rate, the national savings rate in the country, it's under 4%, Jason. You're talking about 10. So we're going to have to multiply that. What do you say to those folks?
You know what? I thought about this a lot, and I love that we went here. And what I would say first is when you just do the first action and follow the law, the other things are going to start working themselves out. It will be uncomfortable because change is always uncomfortable because it means you're growing. You're doing something that you're not used to. I think my belief, Jeremy, is it's going to help folks because this has helped us start looking at the things that they're spending money on and saying, nope, I'm not going to do that.
Mhm.
Like I cycle 3 days a week, and one of the 3 days I'm buying coffee for three of us. So I'm basically buying coffee 3 days a week. The other day, I didn't get coffee. And guess what? They still bought me coffee. The next time, I didn't get coffee, but I bought them coffee.
Yeah.
So now that's already 24, $30 a month. That's coming back to me. I need
Yeah.
some for my bike. And I said, hey, that's low value spending, and it doesn't align with what Patty and I are trying to decide. So I think by putting the law in place, doing the action, that the other stuff will start become more apparent on what you shouldn't be doing.
Yeah, I couldn't agree with you more. Because guess what? Here's another fun saying, right? What matters is measured. If you
Mm,
have the ability to do 10%, guess what? You started a unit of measure, and automate it, like simply like what Jason and Patty are doing. It's how I started, right? Out of sight, out of mind.
yes.
Automate. You'll figure out a way because when the lights go out, guess what? You're not going to live in the dark. So you're going to start cutting out the unnecessary expenses, the fluff, and start paying yourself first. So to Jason's point, what matters is measured. And if you don't know, if you don't have the discipline, put systems in place to automate said discipline. When I first started out, I actually did exactly what you said. I automated everything to the point where, Jason, I was making a pretty good income in the military, right? Again, not crazy. I was in the military, guys. I'm not working as a real estate developer or anything at that time. But I had such automations going that I was actually still traveling to 6 foreign destinations a year. All right. I was going to 6 countries a year, still living my life, having a good time, but I was saving 50% of my income. I kid
Yes.
you not. And that was the goal. That was the threshold. I was looking every single month, how is it that I can get to 50%? And it almost became like a game to me. If you don't want to do 50%, by all means, I'm going to tell you I'm a weirdo. That's very extreme. Okay, 10% is very manageable. And if you go back to that book, The Richest Man in Babylon, what you'll find is he had debtors, he had creditors, people knocking on his door and demanding payments. Right? We're not
Hmm.
saying don't pay your bills. But what he did is he paid himself first. He paid himself before Uncle Sam came knocking. He paid himself before the debtors came knocking. And by over time, he was able to rebuild his wealth. So if you haven't read that book, I mean, it's a very powerful rags to riches story. And it all starts with exactly what Jason's saying. Pay yourself first. Pay yourself, the second one, with interest, right? That goes back to that margin that Jason's talking about. You do
Yep.
have a buffer, a margin, right? So if you can automate 12%, 11%. Just start somewhere.
And start tracking, make a game. Like I love what Jeremy said. Hey, you know, I'm a weirdo and I gamified it. Like I made it so it was fun to try to get to 50%. Like make your game meaningful for you and then pick points to celebrate. Celebrate your wins because they mean something. They mean something to you, to your family, to those that are around you. So set it up to like, okay, I'm going to save 11%. And next month it's 12 and then it's 13. And so 3 months in, you're like, okay, let's go to our favorite restaurant. Let's go out to the movies. Let's do something that's meaningful to us, that we have fun to celebrate our success. Because guess what? That means that you have put you first. You
Mm-hmm.
stop being last in line for your money. You know, I mean, we all know when we're on a plane, like Jeremy flies planes for a living. So he hears this every time he's on the plane. When the oxygen mask comes down, who do you put it on first? Do you put it on yourself or do you put it on the little kids and the old people around you?
No, you got to definitely put the oxygen on yourself because you guess what? You can't help other people if you're drowning.
Yes. Yeah. And
So
that's why I learned being a lifeguard growing up. Like this is like back in the day when you still pull people by the hair and you cross chest carried them and you weren't using all the things that they have them using now, the buoys and different things. But that was one of the biggest lessons for me when I went and there was a guy 40 pounds bigger than me, a linebacker, 4 years old, 3 years older than me. And I was just testing for my lifeguard certification at 15, Jeremy. And we went to the deep end of the pool and I went to rescue him and he grabbed my arm, locked on, and started pulling me to the bottom. And the drill was to get free, push away, and get away. Because what's the point? Like, that's a panic. That's a normal thing someone does when someone's trying to rescue them, right? They want to drag others down with them.
mhm.
And so you have to be able to save yourself so you can be that beacon of light that you're looking to be for your family, that strength, that person that they can look and say, wow, they've got it together. They're really managing it. And it starts really simply. Automate it. You don't have
Yeah,
to think that much. Just make a decision.
we have so much technology today to literally track. I mean, there's apps out there that will tell you you are wasteful spending, and it will tell you where you're wasteful spending. Oh, I didn't know I had a membership to that. I didn't know that I didn't cancel that gym membership from 2 moves ago, right? And they're still taking out that $10, $120 a year, or whatever it is. All that stuff adds up. It's not we talk about this, right? It's not the interest rate, it's the volume of interest. And it's the same thing with your expenses. It's not the $10. It's the multiple cumulative $10 purchases that start adding up. And if you're able to recapture that into your system, and that system has compounding growth and it earns dividends, now you're multiplying your wealth. So you're able to keep what you're already doing, you funnel it in a system that is guaranteed to grow. And then guess what? When life happens, like what I've had, use it. But you have to start somewhere. I'm trying to bring it back full circle here. I would not have had the opportunity. I would be freaking out right now if I had to go and figure out where is this 20K coming from if I just spent everything and I didn't put it away for a rainy day, right?
You would have, no, I mean, you would have been freaking out. And the alternative to that would have been going to borrow from somebody who was willing to offer you liquidity. So that's the next kind of question we're asking. Like when we're talking about this change fund, this recession proof fund, this opportunity fund, because the rule is the golden rule, right? From the book is he or she who has the gold makes the rules. So, what Jeremy just shared again is to bring it full circle, to wrap it up a little bit is, well, where are we storing it now? Where is the best place that we can control and have guarantees, simply put? Like it's not rocket science. Where are we going to store it? Where have
First,
people been storing it for hundreds of years, Jeremy?
I'll put mine in the bank of Huggins, right? That's the first place I'm going to store it.
It's what I was wondering what your bank was called. I was going to ask you. So everybody who's listening, if you don't have a bank name yet, you better, start thinking of what are you going to call your bank? Because I will ask you that question when we're helping set that up for you. Like we have the Bank of Sipple, right? Maybe Sipple Bank would be more fun, but I think the Bank of Sipple is where we're standing at this moment. And you can rename your bank. People freak out. Jeremy, is probably the hardest question I ask people. What are you going to call your bank? They really get a little bit crazy about that. So
Well, and keep this in mind too. So, like we keep saying, it's important to get started. You can have multiple branches of your bank. I have four. My wife has two. Jason's family has multiple locations, right? Not if you think about all of the major banking institutions that are out there, even local ones. Let's go small. Do they only have one location? No. As you grow and optimize and expand, guess what you're going to do? Create multiple branches of your bank.
Well, let's slow that down and make it even easier. When your business becomes so successful that it's running itself, everybody's running top notch, it's making money hand over fist, what are you going to do? Are you going to just focus in and try to make it make more money, that one system? Or would you maybe want to franchise or expand? Like if you're an entrepreneur listening, like what do? Your business is super successful. You go find other ways to make more money. You open another branch, you just replicate what you've done, and now you're adding volume to it. You're adding the ability to serve more people, to make more money, to keep more money in motion. That's all we're talking about.
You gave me a percentage that surprised me a while ago. You talk about the wealthy having more options. What was the savings rate of the wealthy, right? The average American is less than 4%. But what
Yes.
is the savings rate of the wealthy family out there? What are they paying themselves first?
Since 1910, the average, sometimes it's higher, sometimes lower, right? Average is, it's unbelievable, first of all. 38% is what the wealthy have been saving since 1910. The one percenters we're talking about. There's a reason they're the one percenters. They're respecting. Jeremy, sometimes I think this sounds really weird, but you got a purple background, so we can go with love, right? It's it's love. We have to love ourselves a little bit more, and that's by respecting and paying ourselves. Like we all think that, hey, we want to be good stewards of our money. We want to create the legacy. But if we're not paying ourselves first, then that becomes really difficult. That becomes an endless chase of trying to make more money and outwork the system versus playing in the laws. That's why it's complicated for people, right? Like the laws are the laws, period. Like they're there because someone noticed them, but they were always there.
Yeah, no, that's a really, really good point. And so I think our takeaways here, right? Pay yourself first, pay yourself with interest. You are the most important person when it comes to your financial health. No one cares more about your money than you. All right. Not me, not Jason. So if you want to delegate your money to other people and you want to give up control, this probably isn't the system for you. All right. Just bottom line. Like if you're ready to take control of your wealth, if you're ready to pay yourself first, if you want to put priority on you and your family and your system, this is probably going to be a good fit. So I just kind of want to kind of wrap that up there.
Jeremy, and it's not like the opportunity fund. We've had to use it multiple times, like you have, right? For things that just pop up where they were unexpected. Maybe there was an opportunity that came up that seemed like the perfect partnership to expand the mission. Maybe it was, the like the other, we had to put brakes on three of our cars recently. That's not cheap. So
No,
having that opportunity fund built, and some went all the way down to the rotors because we just ignored the squeaking, right? For a while, the grinding, that awful sound. So now we did the same thing that you had to do. And it probably happened in threes because three vehicles, right? And then we had the opportunity fund sitting there where we're able to access the capital. And now we're paying the system back and building it back up from now on the tires. But really, make sure you're doing the basic, simple things. Remember, building wealth, keeping wealth, multiplying wealth is actually simple. We're not telling you it's easy by any means. It's taken Patty and I over 2.5 years of weekly meetings to almost have all of our money for our business side and our personal side all the way dialed in because we're not as good as some other people in this room, in this podcast, at automating things, at doing spreadsheets, at just really getting granular. But I'm telling you, the more granular we get, we start saying, what is that $2.99 charge for? Let's go track that down. And then we're putting that in Google. Like, what is it? Oh, that's for that. Oh, that's when the tire was going flat the other day and I had to put air in the tire a couple of times. We're like, why do we have a charge from something that looks like a laundromat in Massachusetts? right? And it was just air. And it was like three of those $2.50 charges. But just get really, really granular. Because the more granular you are, the more you're aware of it. It doesn't feel overwhelming to measure and monitor. It actually feels really freeing because all of a sudden you have more certainty that your family is going to be okay when change does happen.
Oh, that's a really good point. We didn't talk about how it makes you feel, right? The freedom that comes with the ability to know you can weather the storm.
Yeah.
Um,
Mm.
the- if like I kind of alluded to it, if I didn't have the liquidity to handle all these emergencies, I would be freaking out. I would have to go into probably debt. I would have to have the cost plus the interest of doing it somewhere else. But knowing that I can weather a storm, that certainty, that warehouse of wealth, if you will, that you're able to build, that certainty is liberating. It really is liberating.
Yeah, it's liberating. It's just thanks, Jeremy, for sharing that the way you did. It's so nice to be in control because there's really no control. It's an illusion, but to know that you have the back of the people around you, to know that you have a system in place that's going to take care of you, to know that even when you're using the money, it's guaranteed growing and you're leaving legacy. Like you're doing all these good things with $1 doing three jobs. You're saving it, guaranteed, growing, uninterrupted compounding. You're spending someone else's money, OPM, right, with your line of credit against the money that you have deposited and you're multiplying it with the legacy piece. So, Jeremy, I think if everyone just took away that it's simple, automate it, get granular, start talking about it, and notice where you're putting your liquidity first. I think that's a great place to land the plane, if you will.
Yeah. All right. Let's take it in. All right. Um, as we end every podcast, we just want to remind you out there, you're already in banking.
You're just not the banker yet. Until
Uh,
we talk to you next time, be blessed. Have a good one. Thanks for joining us on Wealthwise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.